Since the 2008 financial crisis, it would appear that sovereign wealth funds are less high profile. They certainly haven't made the multi-billion dollar acquisitions that gave them a great deal of notoriety in the months leading up to the financial crisis. But in fact, they have been operating. They have, especially this past year, been growing, and they have been used by some governments as a way to mitigate against the crisis. Sovereign wealth funds have become one of the most potent capital formation flows in the world today. According to a new study by London-based Preqin, the total value of sovereign wealth funds now exceeds $4.6 trillion, and even that may be understating it. That potency is only expected to grow. That's because of a combination of the petrodollar base of many of these funds, the fact that governments are putting more of their assets into these funds, and new funds are being formed as well. Sovereign wealth funds are an extraordinarily important component of private equity. They are one of the largest sources of funds, if not the largest single source of funds for private equity. In fact, the Kuwaiti Sovereign Wealth Fund has allocated about $30 billion to private equity, which would easily make it the single biggest limited partner amongst private equity. Now, that role that sovereign equity funds are playing is in fact going to grow and will probably become more complicated. There are indications that sovereign wealth funds are now co-investing alongside with their private equity general partners. They are using private equity as a training ground for their own expertise in direct investment.